Let's begin here, in the US on March 14, 2020. There are 1,678 confirmed COVID-19 cases in the US that day, according to the World Health Organization. That same day, Apple decides to close its stores across the country.
Well, Apple is temporarily closing all of its stores outside China.
A week later, on March 21st, cases in the US have gone up by over 800%. And in that week, dozens and dozens of more retailers close, including Nike, Sephora, IKEA, and The Gap. We tracked hundreds of store closures, global coronavirus case data, and official lockdown measures, and found that as the virus spread across the world, Apple has been one of the first to close its stores, specifically in the United States. In most instances, Apple shutdowns prove to be an early indicator of the trajectory of individual cases, other retail closures, and government-mandated lockdowns.
One piece that's really surprised me most about the pandemic more broadly and how Apple has behaved is the number of companies that have either followed their lead or are looking for information from Apple.
Now, with states coming out of lockdown, Apple has reopened and reclosed some stores.
Some news here from Apple that it's going to temporarily close some stores again here, Scott, due to COVID-19 spikes.
That could be a signal of what's ahead. It's sort of like the Waffle House, minus the waffles. See, the American restaurant chain changes its menu based on how severe it thinks a hurricane or storm may be, closing only when the damage is expected to be extreme. So, is Apple the COVID equivalent, or is Apple just more nimble than other retailers because of its business strategy and $200 billion in the bank? Apple wasn't always ahead on store shutdowns. Take its first closure in Qingdao, China on January 28th. There were 5,974 confirmed COVID-19 cases in China that day. Yet, other stores like Starbucks and The Gap had closed some of its China stores that same day or earlier. Within a week of Apple's first closure, COVID cases in China had grown 307%. On February 1st, Apple shut all 40+ of its mainland China locations. John Emmanuel Biondi is a principal at Deloitte and works with some of the world's top retailers.
We did not have any idea at that point of time of what was about to come. The discussion we had was related to the impact of COVID, not so much on the consumers and the market in the United States, but the disruption from a supply chain standpoint.
By March, with the virus spreading far beyond China, Apple moved a lot faster. More than a week before the UK went into lockdown, on March 14th, Apple closed its stores in the country, while others like Nike, Adidas, and Starbucks stayed open for 2 to 6 days longer. Meanwhile, the rest of Apple stores outside of China closed on the 14th too, including in the US, where it has 271 stores. That's more than any other country.
I would say that every retailer who was in Asia looked at the measures that were implemented in Asia and say, can I implement, or to what extent can I implement some of the similar measures in the United States?
In the US, only Patagonia closed that same day. Over the next week, more than 50 major retailers closed. And then in May, stores began reopening. And in June, Apple hit the brakes and reclosed some, including in Texas, California, and Florida. In Orlando specifically, Apple reclosed its store at the Florida Mall on June 26th. 2 weeks later, cases in that county had more than doubled. Still, other retailers in the area, including Nike and Best Buy, remained open. Both companies declined to comment. So, how does Apple decide when and where to close? The company says it looks at the following data on the county level: case numbers, positivity rates, hospital, ICU, and ventilator usage, asymptomatic testing, and more. If public info isn't available, the company says it calls public health departments to request data. But why Apple? Why has the company been quicker to close stores than others? It's not because Apple stores aren't moneymakers, but rather they're not Apple's only way to make money, and Apple has the money to do it. Gene Munster has been researching Apple for nearly 20 years.
We estimate that their physical stores are somewhere between 8 and 10% of total revenue. And online is an additional 10 to 12% of total revenue.
Munster and other analysts predict that large parts of the physical retail sales have shifted to online. During the second quarter of 2020, which included the months of January to March, Apple sold nearly $50 billion worth of products. And CEO Tim Cook told CNBC its online growth was off the charts. The bigger cost to Apple in store closures?
In the March quarter, Apple paid out to its retail employees about $100 million, even though they weren't actually in the stores working. In the June quarter, that number is going to be just under $200 million. And so keep in mind, brick and mortar retail business is close to a $30 billion a year annual business. And so even though these numbers are large, they have the framework to continue to support and pay for employees throughout the pandemic.
Apple's free cash flow in the March quarter was $30.3 billion, even as its stores were closing. Much of that came from online sales. That allowed it to pay its retail staff despite its stores being shut. And Apple can continue to do so because it has one of the biggest rainy day funds in business. When you factor in its debt, Apple has a little over $80 billion of cash in the bank. Compare that with Nike's $8 billion or Best Buy's nearly $4 billion. Apple has so much cash on hand that it could run its operations for more than a year without cutting its costs or selling a single iPhone.
They have a lot of money. They have an ability to navigate this, unlike most companies. And so I would look for Apple to have more store closings than other retailers who are navigating a lot of the same information.